in those steps, like for example, as in the matters of healthcare, education, employment, infrastructure, social security, and other development needs. For these purposes, the government needs certain revenue. It is renamed as CBIC. Earlier it was CBEC. For expansion of these two words is very important for your examination. Under direct concept, we have income tax, CGST, customs duty, and IGST. Under state, we have SGST, stamp duty, and ration. This is the taxes at present what we have. Warm welcome to 6M BBA student. The subject we are discussing goods and services tax. In our previous session, we have discussed about the subject and the syllabus and the exam pattern for you people. And in today's session, we are going to discuss the Unit 1 Basics of Taxation. In this chapter or in this unit, we are going to learn the concept of tax, direct taxes, indirect taxes, and Indian tax structure at present what we have. This is a concept we are going to learn and which is important for your examination point of view. I am Professor Rajesh L.R. from Department of Commerce and Management, Vidyaashram First Grade College, Temple of Excellence, Mysuru. The agenda for today's concept, we have the introduction of taxes, and we're going to learn the concept of direct tax and indirect tax. What do you mean by direct tax and what do you mean by indirect tax? And the difference between both we are going to learn here, direct tax and indirect taxes. The features of Indian tax structure and the features of indirect taxes. And the tax structure in India is divided into two, that is direct and indirect taxes. The brief history of indirect taxes in India. This is a concept we're going to learn in today's session. The concept what we have introduction here, see, in a welfare state, the government takes primary responsibility for the welfare of its citizens. They're saying that one, for the welfare of the citizens, the government has taken certain steps. In those steps, like for example, as in the matters of healthcare, education, employment, infrastructure, social security, and other development needs. For these purposes, the government needs certain revenue. For that, the government is going to collect the tax from the persons for the benefits used by them for earning some amount for their livelihood. So now, the taxation is the primary source of revenue to the government for incurring such public welfare expenditure. If I want to give more benefits to the public, like for example, in the field of healthcare or in the field of education or in the field of employment opportunity or infrastructure or any other social security for the public, so it needs certain funds. For that, the major portion of revenue is coming through taxes, and that tax amount will be utilized for the benefits of the public only. In other words, government is taking taxes from public through its one hand, and through another hand it incurs welfare expenditure for public at large. They're not using this amount for any other purposes. They're using the amount what they're collecting from us in the form of tax, the same amount they're giving for us in other form by giving certain benefits for us, either in any one of the things which is required in our day-to-day life activities. So the amount what they're collecting for the welfare of the public, not for the other activities of the government here. However, no one enjoys handing over his hard-earned money to the government to pay taxes. They're saying that one, I'm not ready to pay the tax to the government because it is my earnings. I have put more efforts and I have gained something here. But as what we say here, to get that benefit, you have utilized the benefits of natural resources, or you have utilized some other resources where if you pay tax to the government and the government supports you people in any one of the things, like it may be for the transportation or it may be for the education concept or even to secure your goods without any damages. Like this, for any one of the purpose, they're going to support whatever the amount they collected. It is benefited for you people only, and it is not for the government. The taxes compulsory enforced contribution to the government revenue by public. it is a compulsory pressure will be made on the persons to pay the taxes for the benefits whatever they utilize it. That is the reason we are going to call it is an enforced contribution to the government revenue by the public here. Government may levy taxes on income, business profits, or wealth, or add it to the cost of some goods, services, and transaction. They're saying that when they're going to collect the taxes from the persons for the income they've earned. Or the profits whatever they made in the business, or the profits whatever made through the wealth whatever they have here. And in some of the cases when I sell my goods to other people here, I'm going to collect tax on the goods whatever I've supplied, or the goods at the time of purchasing the raw material I paid the tax. That amount will be collected by the government, or the services rendered to the public. The service provider has to collect the tax, and that amount should be paid to the government. So government is collecting the taxes in the form of direct taxes as well as indirect taxes. Direct tax and indirect tax, this is a concept. There are two types of taxes here, direct tax and indirect tax. Tax on which incidence and impact, the incidence of earning income and paying the tax to the government will be on the same person. That is called direct tax. On the other hand, tax on which incidence and impact fall on two different persons is known as indirect tax, such as GST. Say in direct taxes, I'm going to earn the income and I'm going to pay the tax to the government. But in the indirect taxes, the income is earned by one person and the tax is paid by other person. It means in case of direct tax, tax is recovered directly from the assessee who ultimately bears such taxes, whereas in the case of indirect tax, tax is recovered from the assessee who passes such burden to another person and is ultimately borne by consumers of such goods or services. Here, the amount of tax will be collected from the income was earned here in the direct taxes, but the person who consumes the services or goods, he has to pay the tax to the government and not by the business people. This is a concept what we have in the direct tax and indirect tax. There will be 2 marks question for you people. What do you mean by direct tax and indirect tax? This is a concept what you have to write. Tax on which incidence and impact fall on the same person is direct. The incidence and impact of tax will fall on two different persons, that is indirect taxes. This is a concept, if you write, you'll get 2 marks in your examination. Now let us discuss about, it is a 10 marks question for you people. Write the differences between direct taxes and the indirect taxes. See, payer of tax and sufferer of tax and one and the same. The impact and incidence will be the same in the direct, and it will be 2 different persons here. And here it is income-based taxes, but it is supply-based taxes. Indirect taxes is a supply-based tax and direct taxes are income-based taxes here. And in direct taxes, rates of taxes are different from one person to other person. They're saying that when in direct taxes, the rates of taxes always differ from one person to other person. Based on his income, he has to pay the tax. But the rates of duties are not differ from one person to other person. They're saying that the tax levied under indirect taxation will be the same for all types of consumers. It may be 0%, 5%, 12%, 18%, and 28%. In any one of this tax bracket, they have to pay the tax to the government. That's it. Entire revenue goes to central government of India. See, whatever the direct taxes collected, it will go directly to the central government of India. But here, in this case, in indirect taxes, one part will go to central government and the other part will go to the state government. So in indirect taxes, the tax collected by the government is divided. One part will go to central and the other part will go to the state government. Previous income assessed in the assessment year. They're saying that one under direct taxes, our previous year income is assessed now and I have to pay tax to that one. But in case of indirect taxes, there is no previous year and assessment year concept only. In indirect taxes, we don't have that. Whenever I'm going to consume the product here, I have to pay the tax to the government. Central Board of Direct Taxes is an important part of Department of Revenue. They're saying that one, for direct taxes, it will be Central Board of Direct Taxes. Central Board of Excise and Customs was the important part of Department of Revenue with effect from 1st February 2019. From when? With effect from 1st February 2019, the Central Board of Excise Duty is being renamed as the Central Board of Indirect Taxes and Customs. Earlier it was Central Board of Excise and Customs. Now it is Central Board of Indirect Taxes and Customs. It is renamed as CBIC. Earlier it was CBEC. For expansion of these two words is very important for your examination. CBIC and CBEC. Central Board of Excise and Customs, it was earlier. Now Central Board of Indirect Taxes and Customs. This is the concept what we have in the present. And next, it is a progressive in nature and it is regressive in nature. Cannot be shifted, can be shifted. So the taxes cannot be shifted in the direct taxes, but in indirect taxes, it can be shifted to other person. Direct taxes have many exemptions and involve higher administrative costs. They're saying that when in direct taxes, we have more exemptions as well as it is more involved of administrative cost is very more. In indirect taxes, it involves less administrative cost. Here, the administrative cost is very less because it is a information technology has been adopted in the GST, which has reduced the burden. We can calculate the taxes easily and pay to the government easily. But here it is not in such a way that when the benefits are given more to the person and they have to calculate what is the actual income earned by him, under what bracket he comes to pay the tax to the government, whether he has to pay 10% or 15% or 20% based on his income, he has to pay the tax to the government. For that, he has to pay for the person who is going to give the financial advice for him. This is the amount of tax you have to pay. So therefore, the higher administrative cost we have in the direct taxes, but in indirect taxes, it is not like that. The cost is very less. The features of Indian tax structure. See, the first feature what we have here, Indian tax structure is multiplicity of tax structure. That is nothing but what we have here, direct taxes and indirect taxes. The second feature of is that the indirect tax holds a large share in our Indian tax structure. They're saying that one, with the help of indirect tax structure only, we are getting more revenue when compared to the direct taxes. The third feature, insufficient tax revenue, is a thing what we have. The fourth feature, incidence of taxation, like income earned or business from the profits or profit from the transfer of wealth or for the benefits what we have received by the transfer of goods or sale of goods or supply of goods or services rendered from one state to another state or one person to other person. Like this, whatever the incidence is there, on that we are going to levy the tax here. The fifth one is Indian tax progressiveness in the tax concept. It is an inclusive concept and it always benefits to the government what we have here. The sixth feature is very narrow in India and both direct and indirect tax systems. The both are a large it is divided into concept for a large variety of concepts we have here, and where the goods are sold in the market like Indian market like anything, and plenty of businesses have registered and they are paying the tax to the government, and the government is getting more revenue after the introduction of GST. The seventh feature, Indian tax structure, is the complexity in Indian law. It is where some litigations, what we can call, or some concepts we can't understand clearly. So those concepts are there. But if we go through the concepts thoroughly, we can understand and there is no litigation and there is not any complexity while understanding and paying the tax to the government when we are getting benefits for the amount whatever we're going to pay tax to the government. Indirect taxation features. Indirect taxation is a policy often used to generate tax revenue. It is a policy used to increase the revenue for the department as well as for the benefits. And it is levied on goods as time of supply or import or export. They're saying that when the goods, whatever it is transferred, in the form of export, or if we receive the import, or whatever we do that one here, when goods are moved, so automatically it is eligible for the taxation. It is also known as commodity taxation. Indirect taxes where incidence and impact falls on two different people. It is a regressive in nature. The major assessee are corporate entities and service providers. Indirect taxes are very easy to collect when compared to direct taxes. So indirect taxes are very easy to collect the taxes when compared to direct taxes. It is helpful in promoting social welfare. Indirect tax has a wide tax base. Tax imposed on goods and services causes increase in the price of goods and services. This is a concept what we have here. There's a major features, and it is a 10 marks question for you people. If they ask, you can write it is a policy often used and it is levied at the time of supply. Commodity taxation, incidence and impact falls on two different people, regressive in nature, and the people who are here, corporate entities, service providers. And compared to direct taxes, it is very easy to collect. Promoting of social welfare, it is a wide tax base, and it causes tax imposed on goods and services causes increase in the price of the goods and services. This is the thing what we have here. The tax structure in India is divided into direct and indirect. While direct taxes are levied on taxable income earned by individuals and corporate entities, the burden to deposit taxes is on the assessees themselves. If I earn that one, I have to pay the tax to the government. On the other hand, indirect taxes are levied on sale and provisions of goods and services respectively, and the burden to collect deposit tax is on sellers instead of assessee. I'm using the product here, I'm consuming the product here, I have paid the tax to the seller, and seller is responsible to pay the tax to the government and not by the person who have got the benefit of that product or has received the services, and all the burden falls on the seller. The taxation system in India is such that taxes are levied by central government as well as state government. Both are going to levy the taxes and they're going to collect taxes from the public. Some minor taxes are also levied by the local authorities such as municipality tax and local governments. So this is a tax where they're going to collect for the benefits of the local surroundings. Over the last few years, the central and many state governments have undertaken various policy reforms and processes simplification towards great predictability, fairness and automation. So since some large businesses are approaching, as well as the business sectors have increased here, they have sat together and they have some of the states and they've decided to change the tax system, and they introduced information technology, which has reduced the burden on the shoulders of the business people as well as the tax collectors, and the administrative has become very easy. Now I can identify where the raw material was taken from which place and which state, and where the raw material is moving and where it has moved and converted into finished goods, and who is the person is consuming that product. We can identify easily now after the introduction of one nation, one tax concept in our India. And the goods and services tax reform is one such reform easy to complex multiple indirect taxes in India. Major central taxes we have income tax, central goods and services tax, customs duty and IGST. And in the state goods and services tax and stamp duty and registration. These are the tax thing what we have in the present scenario. In the present scenario, under direct concept, we have income tax, CGST, customs duty and IGST. Under state, we have SGST, stamp duty and registration. This is the taxes at present what we have in our government. Brief history of indirect taxes in India. In India, indirect taxes were first introduced in the year 1944 to protect the British made goods in the domestic market. See, to protect the British goods, whatever they produced and which was available in the Indian market. So to avoid that one, they started to collect the indirect taxes. After Indian independence, the government introduced some new indirect taxes. in the 1944, the British government made the goods available in the market. In the same time, they started to collect indirect taxes on the goods produced and sold in the market. After getting independence in our country, the Indian government has introduced new indirect norms was made and law was introduced, like in the customs, excise, VAT, and other concepts were there. Today, many of these taxes have been replaced with one name called GST, a unified and efficient taxation system. So in India, we had nearly plenty of taxes were there with the different names, and people were getting struggled to understand and whether which tax they have to pay, why I have to pay, for what purpose it is levied. They were not knowing anything. Nowadays, it has been removed with all other things, and they made only one concept here, GST, and it is borne by the person who is going to consume the goods or who is going to receive the benefits of the services, and not by the manufacturer or the wholesaler or retailer is going to pay the tax. Only the final consumer is going to pay the tax here. Earlier, the manufacturer was paying the tax, wholesaler was paying the tax, retailer was paying the tax, and even the consumer. Now, only the consumer is going to pay the tax. Whatever the tax paid by the manufacturer is going to collect from the wholesaler. Whatever the tax paid by the wholesaler is going to collect from the retailer. Whatever the tax paid by the retailer is going to collect from the consumer, and the final amount will be paid to the government and not the entire tax collected by at different stages of the process of movement of goods from manufacturer to the ultimate consumer. In our upcoming session, we are going to discuss introduction of excise duty, customs duty. These were the duties which were introduced after independence, what we got, and the issues with the previous, what were the issues we were facing with the excise duty, customs duty, and other duties, whatever we had in the government. And now, after adopting VAT, value added tax, in Indian concept, what were the changes was brought and what it has happened. And now, the new concept, introduction of GST and its journey, we are going to discuss in our upcoming session, and which is required for you people for the examination point of view. Certain concepts are very important and it is required in your future business concepts. Thank you to all 6M BBA students, and namaste. Have a good day.